Welcome to your DMV Real Estate Market Report for March of 2024. I'm Edward Slavis with the Slavis Group of eXp Realty, and let us begin, as always, with interest rates. Interest rates peaked in late October, early November at about 8.15%. They dropped, fairly precipitously through late December to early January. They hit 7%. And we've been flat there more or less ever since. It did tick back up. Now it's dropped a little bit at 7.15%. This being an election year, most of the times in election year, the Fed is very cautious about having drastic changes in monetary policy because they don't want to be seen as trying to influence or, putting their thumb on the scale during an election year. And this year will be very interesting to see what they decide to do. Last month, I had mentioned that most analysts were predicting, several rate decreases throughout the course of the year. I do think that is still the majority opinion of most analysts. However, at the last Fed meeting a few days ago, they did report that inflation, core inflation, had ticked up slightly. So I think we'll be at this 7% level for a little bit longer than I'd like. But again, most analysts are still predicting rate decreases this year. In terms of new listings, last month I predicted that we're going to start seeing an increase over the previous year, and we are in fact seeing that. This is the last 3 years of new listings by month. And as you can see, there were a lot more listings in 2021 than in 2022, and 2023 was very, very slow. I think we will go and have a fairly busy year. Perhaps not up to 2022 levels, but I think we will certainly beat last year if the anecdotal evidence we're seeing now is any indication. In fact, if you go and you look at the February year-over-year change, we are finally now back above that level. So there are more new listings in February of 2024 than in February of 2023. So that is certainly good news that there's some more inventory coming to the market. More sellers feel comfortable coming to the market. In terms of the median sale price, this is for all of the Washington, D.C. metro area. This is not for Washington, D.C. As we talked about, prices have either been flat or increasing over the last of the 3 years, even with the higher interest rates. So you can see the most recent month. Now, 1 month does, it is a data point. It does not make a point. You can see the most recent month here on the right side is kind of a sharp tick up. That could be seasonal. It could be a sign of things to come. But if you look at the month over month change, and again, this is the median sale. This is the year over year change in median sale. Other than a few months a year ago, the median sale has always been higher than the same month that previous year. And this is no exception. In fact, for all properties, as this blue line, it was 5% higher. For detached homes, the median sale in February of 2024 was 10% higher than the median sale of February in 2023. So although these don't look like big changes, from 0 to 10% is actually fairly substantial. Admittingly, on things like new listings, to go back, this being a positive, higher than the previous year, is higher than a slow year. But on prices, because they've continued to go up, this is 10% higher than a year that was already higher than the previous year. Median price per square foot, very similarly shaped chart. Over the course of the last 3 years, the trend line on all three of these are higher. If you look at detached homes, it was about $260 a square foot at the start of this. We're now at $230 a square foot. $300 a square foot in the most recent data. So all of them are higher now than they were 3 years ago. And again, the proof here is in the year-over-year chart, where all of them are about 6 to 7, 8% higher than they were a year ago. And other than a few months here in 2021, a few months in 2023, successively every year it's gotten higher. Now, what about homes that are selling? This chart looks similar to the new listings, where there were more homes closed in 2021 than 2022 than 2023. But I suspect the closings will start increasing. If you look at the year over year, this line was approaching zero. I suspect, and I'll come back next month and tell you if this is true, next month this will be positive because we had new listings in February of 2024, this last February. Those properties haven't closed yet. So those properties are closing now as I make this report, and I think we'll see those in the data for next month's report. So expect this line, my prediction is to be positive, which is more homes will have sold in March of 2024 than in last March. Okay, a sign again that the new listings is a sign that the sellers are feeling more comfortable coming to market, and this is a sign that buyers are returning and are buying. So what does all this mean? We now have slightly more slightly more homes are being listed. The home sales are slightly increasing. Inventory is still down. We still do not have great months of supply. The question is, will it increase? My prediction is yes. It's all relative. We will have more properties listed, and I think more buyers will be entering the market. So those homes will be selling quickly. And I think we're going to see an increase in both the absolute number and percentage of homes that sell. For sellers, this bullet point has remained unchanged for the last probably year or two. If your home is properly prepared, priced, marketed, and showcased, it's still going to sell for the price you want. A lot of the homes that were listed and did not sell were simply they were priced too high for the market, or they weren't properly prepared. They didn't do, sellers didn't do the preparations of maybe repairs, paint, staging. Perhaps the market did not, the agent did not market it well, did not showcase it well. But if you're prepared to do, what this market requires, you'll still be very, very happy with the price. It is still a seller's market by any indication. Maybe not as crazy as it was in 2020, 2021, but by any indication, it's still better to be a seller than a buyer. Will the market continue to heat up? My prediction is yes, and we'll revisit that question in months that follow. Certainly, if you have any questions at all about selling in this market, let us know. We're happy to meet you, provide you a free home evaluation and a free marketing strategy. For buyers, I honestly think now is the time. I thought the last 2 years was a great time to be a buyer because you had more leverage against a seller. If my predictions are correct that the market's going to heat up, that unfortunately means heating up and becoming more of a seller's market. So we had a great open house at a listing of ours over the weekend. Several, probably 24, 25 groups of buyers through. I've spoken to several of them and said, we have off-market properties now. If you are interested, I need to get you in there early because if these get to market, it will be very, very hard to compete. And I think that is the secret of buyers buy now before rates drop too much, and then approach it with the right strategy. Because interest rates are higher, we do have one of our lender partners. You can refinance at no upfront cost for up to 3 years. That is very valuable because by most predictions, if you are buying today, you will be refinancing, let's say in 18 months and again in 36 months as rates drop, and you can lock into a new 30-year fixed. We do have a buyer satisfaction guarantee that we always offer buyers. They buy a house through us. We'll go through the inspection, warranty processes, etc. But if for any reason you're not happy with the house, we will sell it for you at no cost. Some terms apply, but happy to talk about that benefit that we offer to our buyer clients. And if that again interests you or someone reach out to us. We'd be happy to have a free consultation with one of our agents. That again was your real estate market report for March of 2024. Any questions at all? We are very easy to get a hold of. Full contact info below this bio. As always, like and subscribe. Let us know if you have any questions or feedback. Thanks, and we'd love the opportunity to work for you. Take care.